Before we begin, a quick disclaimer. This podcast is for entertainment and information purposes only. It should not be relied upon as a base for any investment decision. Nothing here is a solicitation or an offer to buy or sell any security. Either the host, guests, or clients of either may own securities discussed on this podcast. And let's see. You're also an investor in Micron. And a lot of value investors are in Micron, a lot of the big names too, maybe because it has a decent market cap. And I think it's a very interesting space, but I don't know enough about it. I'm so curious, what attracts you to Micron?
Well, Micron...
Oh, wait 1 second, because
Micron is a memory manufacturer. You have a NAND, which is basically your disk drive, right? Where you store information. Micron is basically a producer in both of these types of memory, DRAM and NAND, right? But although, right, the dynamics of these different sectors are very different, right? The dynamics in DRAM are, I would say, a textbook case study, in the sense that it's a sector where you have extreme consolidation. You have 3 players controlling 95% market share worldwide, okay, Samsung, Hynix, and Micron, right? Then you have insurmountable barriers of entry. I mean, it's very difficult to enter into this business, not just because of the capital requirements. I mean, if you want to build one of these facilities, which are called fabs, right? If you want to build one of those fabs, I mean, you have to spend billions. Less than that, I mean, you are not a player, okay? You are a joke, right? So on top of the elevated capital requirements, then you have the expertise of the process. I mean, most of these semiconductors are printed in wafers, okay? One of these wafers take to manufacture several months. So when a wafer enters into the fab, it takes 3, 4, 5, 6 months, and the time is getting longer in order to produce the final product. The number of steps in order to produce from a plain wafer, okay, your memory product is more than 100. So it's not something like, I mean, you buy the equipment from Applied Materials, Lam Research, and then you start producing, right? No, it's much more difficult than that, okay? Once you have all this machinery is very complex, and then you have to put it at work, okay? And that's the difference between, for instance, these leading players and the Chinese competition. Okay, one of the main risks of this sector is that the only competition that can enter into this sector are the Chinese, right? Because they are the only ones with the will and the long-term horizon to invest in this sector. Okay, they don't mind if they spend tons of billions with no profit for 5 years. Okay, but they want to have results. The problem is that once you have bought all this expensive machinery from Tokyo Electron, ASML, Applied Materials, and these guys, right? You put it in the fab, then you have to run it. And so far, sorry, that has been very difficult to do, right? And the problem is that as the time goes by, the process gets more complex, right? You need more steps in order to make your transistors more and more smaller, right? It's called miniaturization. Okay, so as the nodes get smaller, then the process gets incredibly complex. Okay.
So this like one of those cases where you can have a competitive advantage not because of your patents or like unique machinery, but because you've got processes that are really complicated down, and it's not easy for like employees to move to another place and do the exact same thing. They need like a lot of employees to all leave at the same time with different knowledge. Or
exactly, you need a lot of employees, but one of the things you said is very interesting, because this has been the main avenue for China in order to compete in this sector. Try to buy several of these engineers and then to pray that a miracle will happen, right?
Okay.
Some of these movements have been accompanied with IP theft, which of course has been very questionable, and Micron sued several of these competitors. Now they are completely off because they don't have any access to, now even to the machineries, okay, because the Department of Justice said that it was IP theft. So now they are out of any competition. But yes, you're right. This is one of the main risks of the thesis that
no, but that's interesting that what you're saying. So there were actually cases where there was like IP theft, but those companies were shut down. They weren't allowed to like compete internationally or something.
Exactly. It was this case, which was a Fujian Jinhua, right? Which was a company. It was a DRAM producer, and it was considered to be the DRAM champion for China, right? The business was closed, I think, 2 years ago, basically because the US said that you cannot sell machines to this company. Okay, so it's very difficult then for this company to operate. Okay, once you start operating, of course, you are very far behind your competitors, but still is a risk for the sector. It's memory is like a commodity, right? It's supply and demand.
Okay.
So when supply is plentiful, you know that your prices are going to be quite bad, right? So even if China produces very low quality, memory, that's enough in order to break the balance of the market. So I would be concerned not so much on the quality of Chinese memory, which we know that for the next decade, it's not going to be on par with Micron, Samsung, and the likes, right? But I would be concerned with Chinese efforts, in the sense that if they are able to produce something, that's enough. Okay. But we don't see that, right? We don't see that. In DRAM, the only competitor right now in China, they are start producing now, right? And you don't know very sure, because you know that in China everything is very opaque, right? But the only competitor, right, is a company called Changqing Memory Technologies, okay, which has a dubious IP. They say that they bought the IP from a company that no longer exists, right? But this company has IP that was relevant in years ago, so this IP is not relevant any longer, right? So we don't see any Chinese competition entering DRAM, which is the core of Micron's profits, and we see a marginal Chinese competition entering in NAND. Okay, but just to make the thesis clear, the thesis can work perfectly even if the NAND business is a disaster. Okay, we think that the NAND business, for technological reasons, right, the NAND business is not going to be very good in terms of economics, right? Probably some of your listeners have heard about Moore's law, right? The ability, okay, to double the transistor count, right? In the case of NAND, Moore's law has been quite alive. So it means that with the same capacity, okay, to produce wafers, it means that the producers can feed a higher amount of transistors, right? So it means that your supply is still growing. Even if your capacity doesn't grow, your supply, measuring bits, right, is still growing, right? Yeah. So for the balance of supply and demand, that creates some challenges. Okay, so that's NAND. In the case of DRAM, the demise of the Moore's law is more apparent, right? For manufacturers, it's getting more and more difficult, right, to keep bit growth just from technological growth, right? Not from supply additions, right? So in DRAM, I think they will be able to grow bits at 10%, right? And demand is going to be 10, 15, 20%. Whereas in NAND, the bit growth is still a bit higher. And I think and the industry thinks that as well, that's going to be the case for the next several years.
And like the consolidation you mentioned, I think that's really important. You see that across a lot of industries. Once you get there, it can be very attractive, especially if you're coming from a very a marketplace where there used to be a lot of competitors. I've read this thesis by, I think it's Gavin Baker, about like semiconductor industry, and it's about AI and a lot of cool stuff. And part of his argument was that memory wasn't really caught up in the AI hype. Well, it actually was affected. Were his thoughts. And it could maybe lessen some of the cyclicality of memory, if I remember correctly what his thesis was. And I thought I'm always interested when I hear something like that. So I was curious what your thoughts are.
About first cyclicality then, and then about future trends, right?
Well, yeah, or maybe that, yeah, I think they're separate questions, you're right.
Yes, okay. In terms of cyclicality, you are right. I mean, when you have a fixed cost business that players are trying to produce at full capacity, that's what happens, right? Things have changed over the last 7 years. I mean, when you look at the pattern from let's say 2005 to 2013, and then from 2013 and 2020, things have changed, right? In 2013 is when Micron bought the last player, which was Elpida, right? And then the current structure was put in place, right? Since then, you can see that the cycle, measured in terms of margins, let's say gross margins of these companies, they don't fluctuate so much, right? But to be honest, I don't care. I know it can be a cyclical business, but when you look at the long term of the business, I mean, all of these companies, all of these names are long-term compounders, without a doubt. I mean, for sure. Right, so as in the case of oil, I cannot tell you whether in the first quarter of next year the demand from servers or from smartphones or from whatever or from desktops is going to be higher or lower. I don't have any idea, right? But you know that overall the trend is positive. Okay, so that's the first remark. The second remark, I mean, the memory is going to be one of the big beneficiaries of AI, Internet of Things, 5G, the autonomous vehicle, you name it, right? All of it, because the needs of memory in every of these fields is increasing, and is increasing at a faster pace, right? So I mean, when you look, for instance, at the 5G, what implies for smartphones, it means basically that your DRAM needs will basically double, or at least increase by 50%, right? So now you can have a smartphone with 3 gigabits of DRAM, and that can go up to 6, 8, 10, or even 12, right? So that's incremental demand, and that's for sure, right? And the same for the autonomous vehicle. I mean, probably that there is a long way ahead in order to reach the autonomous vehicle. The thesis of these players don't need any of this. I'm talking about, okay? The only unit is that demand is still as strong as it was in the past, okay? But as we have been speaking, I think demand is going to surprise to the upside, but you don't need it, right? And the only thing that you need is that still the consolidation of the industry, okay, provides some rationalization of competition, right? Which it may not be the case, okay? We know that Samsung is a very aggressive player, right? So that can distort the supply-demand balance, maybe in a given year or something.
Because like Samsung, you're also investing in Samsung, I think. And they're aggressive on price, so but you don't mind, or?
The Samsung story is very interesting, right? First of all, Samsung is the leader in DRAM. They hold a more or less 40% market share, right? and they hold 14% market share, and they also hold the technological advantage. Okay, so in terms of cost, because it matters how many bits you put into a given wafer. Of course, if you put more bits into a given wafer, your cost is basically the same, but you can sell more bits, right? So
it's
that's
like the Intel of DRAM.
Exactly.
Okay.
So that's the advantage they have. So they are leader in DRAM. They are leader in NAND as well, and in NAND they also have a very high technological advantage, a very large technological advantage. Sorry, and then Samsung has other optionalities that Hynix and Micron don't. Right? Samsung has a foundry business, which foundry basically is you put fabs and you manufacture chips for third party, right? Now the main player is TSMC, the Taiwanese company, and now you can see because of the wars between AMD and Intel that the production process is actually very valuable, right? It's what is driving a large part of the value creation over the value chain, right? And you can see that now AMD can compete face to face and even surpass Intel because the production capacity of TSMC is much higher than than Intel. Sorry, Samsung is the second player in the foundry market. TSMC holds a 50% market share in the overall foundry market, and Samsung holds a 20% market share. The important thing is that the semiconductor industry has been moving to this fabless business model, which means that basically the production is going to be concentrated in a few foundry players, and I bet Samsung is going to be one of them, right? When you look at the evolution for a given technology, for a given node, for a given miniaturization, right, you can see that it has all the dynamics of a winner-take-all situation, in the sense that when 10 years ago, you had 12 foundry players able to produce at that node, but right now you basically have 3 players. And in a couple of years' time, you will only have a couple of players. I'm not betting that Samsung is going to surpass TSMC, which is formidable competition, right? I'm just betting that Samsung is going to capture some part of that additional market share. And I think that business is really valuable. Samsung has been always a hardware company. They have a hardware mentality, right? So this kind of challenge is very suited to their mentality, to this incremental, marginal mentality of doing little tweaks to existing technology and to follow a technological roadmap. I think Samsung has done that in the past several times with mobiles, with TVs, and with many other things, and I don't see any difference in this case.
And I mean, you're usually very mindful of capital allocation. Korean chaebols, I think they're called, are very notorious for being a bit slow to return capital to shareholders. Is that a worry, or
it is definitely. Okay. And to be fair with Samsung, the capital allocation policy has been improving since 2015, right? I mean, I'm not going to go into the details of the Samsung empire.
Sure.
Different and the different subsidiaries of the family and all the inheritance issues they have right now. But it's fair to say that the shareholder policy could be improved. They are going to announce a new shareholder policy now in January. The market and myself is expecting that it's going to be better. But over the last 5 years, they said that the policy it was going to be better, and the dividend has been increasing. They have been repurchasing preferred shares, which they trade at a discount because they don't have any political rights. But anyway, in the other ones, you don't have any political rights anyway, because
there's like voting rights.
Sorry.
It's voting rights.
Voting rights, correct.
Yeah, and like Korea's really notorious for those, right? That there are a lot of them, and they all trade at discounts to the common.
Exactly. So I'm invested in the preferred shares, and Samsung has said several times in the past that they will target when they do repurchases. that they will target the preferred shares, and they have.
Yeah, and just sorry to interrupt you again, but maybe for the US listeners or viewers, like the Korean preferreds, it's not like a US preferred because the preferred is actually the same as this common stock. So it's not like the US preferreds are often like bond-like, and in Europe and Korea that's not the case. They're just more like common stock, but they have a different name, and in this case, different voting rights. So that's
Correct. The historical background of this reason is basically some of these companies, the chaebols, as you said, at some point they decided that they needed more capital, right? But they didn't want to lose the political rights, so they decided to issue these shares, and this is basically a legacy, right, of those past. Okay.
Yeah, and they're sometimes not as liquid and things like that. But it's if you're a value investor and you have a small fund or you're doing it yourself, then it's a great opportunity. Oh, that's something. You're doing so many interesting things. You also did some convertible investments. If I can quickly ask you about those, you did one like for in Osisco Gold, for example, Osisco Gold Royalty. I love those companies. Yeah, I was wondering what made you do that, or
well, we are right. We hold right now a couple of convertibles. One of them is Corp, which is a pawn shop company. It's very well known between the value investment community. It's a business with a lot of potential, but basically with corporate governance issues, right? On top of that, unfortunately, the business hasn't behaved as it was expected over the last 6 months. It was a anti-cyclical business, but because you don't have people going to the pawn shops, that's basically you don't have any business, right? So you see how your pawn loans outstanding are going down and down because people are redeeming en mass, right? I mean, we bought these two companies, the convertibles, because they were paying a decent coupon, right? In the case of Corp, the yield to work was 7%, and if something bad happened in the economy, then you had the optionality, right? With very little ups and with very little downside, I would say. And in the Osisco, it was the same. It was the same mindset, right? In the sense that, well, you don't know whether gold prices are going to be much higher. I don't think so, but sometimes what I think doesn't matter, right?
cool.
So we bought them just to see as a source of optionality and anti-cyclical investments, and in the meantime, just to clip the coupons.
So yeah, those were more like worst case, I get a good yield, and best case, something great.
Exactly.
Oh, okay. That's cool. Did you, maybe I rushed on a little bit from the semiconductor talk. Do you have any other like interesting ideas in that area, or something that I missed about your thesis? Because you sort of
just to tell you the overall valuation metrics.
Yeah.
Okay, we are invested in Samsung, Hynix, and Micron in that order, and that's the technological lead. Samsung is the first player, Hynix is the second, and Micron is the laggard. Mm-hmm. But it has been closing the technological gap, and the team has done an extraordinary job over the last few years, right? The only company with debt is Hynix, but with very little debt. Samsung and Micron have large cash balances, as I told you that we like no debt, right? Over the last 10 years, when you forget about the cycle and the cyclicality and the blah 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 of all the analysts following these stocks, Samsung has obtained a return on net operating assets of 20%, Hynix 17%, and Micron 15%. So it has been quite reasonable, and they have been able to reinvest those earnings at attractive rates. I mean, the business is not deteriorating because they are having more capital. Quite the contrary, right? And more or less, right now they are trading, Samsung is trading at 1.7 times enterprise value NOA, okay? And if you think that they are going to earn 20% in the future, I think that's quite cheap. They should trade at around 3 times, right? So the upside from current levels would be something like 70-80% if you buy the prefers in the case of Samsung, right? And then you compound at an 8% rate beyond that upside. Hynix is trading is the cheapest name, right? It's trading at 1.2 times book value, which for an asset earning at 17 times ROA and growing at 2-3%. I mean, it's the valuation is crazy, right? I think that because it's a Korean name and investors don't have sometimes because they don't have access to the Korean market, and other times because they don't like the Korean market, even if they have access. That is why it's trading with a discount versus the peers. And Micron is curiously, I mean, when you put Micron versus peers in the US space, of course, Micron is very cheap. But when you put Micron versus the DRAM makers, Micron is the company which is trading quite expensive, right? Micron is trading at 1.8 times, sorry, and it has been earning 15% ROA. For me, Micron target price is around $100, okay?
Okay.
So it implies still a substantial upside from here, because it's trading at around 60, right? And if you reach 100, that would mean that the stock is going to be, because you are applying an 8% discount rate, right? It means that if you are buying Micron at $100, if the stock behaves like it did in the past, then you will earn 8% compounded, which is quite nice, right?
Yeah, and it is a favorite among a lot of great value investors. I've seen it come up a lot, but because of the nature of the 13 Fs, you can't see if they're also in Samsung or Hynix. So possibly those are even more in demand. I think it's that's really very interesting area. Definitely going to research it further. Maybe before, if you still have time, and if we before I wrap it up, maybe talk about your highest conviction idea or your main investment is Checkpoint Software. Mm-hmm. Do you still have a few minutes or?
Sure.
Yeah. Okay, that's awesome. Thank you. Intrigued by Checkpoint Software. What you made it like a huge position. You really that's maybe interesting to ask you a little bit about, because I think it's twice as large as your position after that. So how are you thinking about sizing it like that, and why this one?
I think it's Samsung because it has increased over the last few days, right? Because
okay.
of the rotation trade and all that nonsense. But Checkpoint is interesting as you said, because if you conduct a superficial screening on the name, then you will see that it's very expensive, right? I mean, not as expensive as Fortinet and Palo Alto, which are Checkpoint's main competitors in firewall, right? But of course, it doesn't seem to be a no-brainer, right? It seems to be okay. But the problem with Checkpoint, of course, it has a very large cash amount in the balance sheet, which distorts a lot of metrics. Okay, so when you undo the accounting, and you, as I said at the beginning, when you do the accounting on an unleveraged basis, right, then you can see that Checkpoint is not so expensive. It's not cheap in the value investment sense that I mean you are buying a great business at 10 times price earnings or whatever, right? But it's still cheap, right? The upside is not so big. I think from current prices, the upside would be around 25% for a 7% discount rate, which I think is high for a high quality business such as Checkpoint, right? So I would say target price is around 145, something like that, and then from there on you can compound at 7%, right? The nice point about Checkpoint is the management team, right? they have been the pioneers in the firewall space. Okay, they invented the firewall back in the 90s, right? And then they founded Checkpoint, and since then they have been both shareholders in the company and the management team. I mean, the CEO Gilles Schweb was the inventor of the firewall, and he still owns 20% of the company, right? As in the case of Berkshire, the capital allocation policy is extraordinary. I would say that Berkshire is another holding I have. Checkpoint and Berkshire are probably the two names with the best capital allocation policy by far. They don't pay any dividend, okay, which, you know, it has negative tax consequences. And they just repurchase shares. Both Checkpoint and Berkshire have been one of the few companies that have been repurchasing shares over the last few months. Just to give you an idea, the enterprise value of Checkpoint is around, I would say, 13 billion EV, right? And they have been repurchasing more than 1 billion in shares over the last at attractive valuations.
So 7-8%, that's a lot.
Yes, so it's quite crazy, right? So the management team has, as I said, a 25% ownership, right?
Yeah. They
have 4 billion in cash for a company with an enterprise value of 15 billion. They have been holding that cash for over a decade. Well, the cash has been growing, but in terms of the size of the company, the cash has been roughly constant, right? Yeah. And they say, and with a lot of reason, that they are not going to spend the cash in very expensive acquisitions. I mean, when you look at some of their competitors, I mean, they are paying multiples that are out of this world, right? It's very nice for them because then they can show that they are growing revenues and so on and so forth, but they have very little to show in terms of economic earnings. I mean, I give you the capital, and then you have to show me what are you getting out of that capital, right? And Checkpoint, in terms of stewardship of capital, is top notch. I mean, you cannot ask for anything better, right?
I think it's another really sticky business as well. You seem to like that a lot, but I don't think people are switching firewalls or internet security very often. Is that true, or?
Yes, it's quite true. Okay. And actually, because of that, Checkpoint has been able to obtain very high margins on the business. The margins in terms of the net income line they are around 50%. So
yeah, and your upside case is like modest because it's not a super high growth business.
Exactly. The cybersecurity space in general has been growing, and even more because working from home, right? But Checkpoint is considered by the market as the slow grower, right? And in these times, you don't like it.
Yeah. And is there some optionality, and like, are they doing R&D still, or you know, I think owner operators are pretty notorious for doing good R&D, and so I'm just curious.
They have been ramping R&D over the last few years as a percentage of sales, right? And they have been ramping the marketing efforts as well. And I would say that have penalized the margins, but we feel very comfortable because we think there is an upside in terms of marketing. Okay, so cool. Checkpoint in terms of cybersecurity capabilities is still on par with Palo Alto and Fortinet, right? And they are still growing. I mean, they are not growing at 10%, right? But they are still growing at a respectable 3-4%, and more than that, they are growing profitably, right? So they are not growing with growing losses. I mean, it goes straight down to the net income. So we are just expecting that things go as they have gone over the last 5-7 years, right? And they still grow 1-2%, not more than that. With that, the thesis can work.
Cool.
I would say it's a very low risk investment.
And that's why you sized it like 1-2, right?
Exactly, so, and that's why. Yes, exactly.
Okay. Well, thank you so much for being on the show. I really enjoyed you taking us through a lot of your investments and why you're making them, and what your ideas are behind capital allocation and owner operators. Owner operators not so popular in bull markets because I think their value add comes in the downturns when they're not going bust. But then people like them more again. If people want to read some of your letters or check out your company, or maybe you're on Twitter, where can they find you? And
they can go to brightgatecapital.com, right? And
yeah.
they will have a section. Otherwise, they can ask you my email, and I will put them in the distribution list.
Cool. Well, thank you so much. And that's it. And see you next time.